Hello traders, today is January 24th, 2014. This is a Euro dollar monthly chart. Let me just explain my analysis here, and then you can make an informed decision for yourselves. So these are monthly bars, each one of these. As you can see, we're just hovering up to this trend line here. It's been here for some time, a few months in fact. So I've got my eye on this level for a short on the Euro dollar. Now it's not just this trend line that I believe is going to prevent this price action from going up. If I draw a Fibonacci retracement level here, you'll see that we have actually also hit the 61.8% retracement level on the monthly chart on Euro dollar. So go down to the weekly chart, and now we can see clearly, more clearly, a possible point of entry. So let me go into that in more detail. So this bar here, we broke the low of that bar here on this weekly chart. Obviously each bar is 1 week's worth of data, so this takes time. So to me, we've bounced the 61.8, bounced off the 61.8 with the major resistance area and previous high over here, previous high here. So a very good area now for a potential short trade. So now this is why I'm watching it. I'm not saying this is going to happen, but the potential is definitely there, guys, for a short on the Euro dollar. Now we go down to the daily time frame. So now we're looking for the perfect entry scenario. So this bar here, look at that major, you can see that's basically saying at the time, if we broke the low of that bar, which we did there, the market's going to drop. It did drop. It went back up for a time, made a new low, and now has since come all the way back up. And what do you think this level here is? It's a 61.8 retracement level. Again, for anyone that doesn't believe in Fibonacci is fooling themselves, because it's just a natural area of support and resistance, because so many people as traders use these levels. So as you can see, price has hit a 61.8 retracement level. We've got another reversal signal here on the daily. Now for me, I would prefer to take this if price is higher. So for me, I'm not going to take this here. It's too high, too low. Stop losses, if you're going to go in here, which by the way you wouldn't do yet, because we need to see a break of this bar, but you know, that's 200 odd pips to be able to take this trade. So for me, I'd like to see the price action up at this 76.4 level, retracement level, which is at 137, 138. 138 would be the perfect entry on the Euro dollar short, and then what you know, you could put your stop so close then up here, just above the highs. Obviously not too close to the highs, because any professional trader will know that there's plenty of stops up there. So look for that, guys. Potential short Euro dollar around 138. So this level here, 137 to 1, I keep saying 137, I mean 137.97. So 138, just round it up. 138 is your level, a lovely safe entry to short the Euro dollar. Obviously if it goes wrong, doesn't matter, that's trading. But the potential risk reward is superb on this trade. You've got your stop loss potentially up here, and then your take profit could be, you know, hundreds and hundreds of pips away. It's a very, very nice setup, guys, if price gets there. You could be more aggressive now and try and get in at this level here, but I wouldn't if I were you. And I'm not saying you should take any of these trades, I'm just pointing out the scenarios, potential scenarios. So 138 Euro dollar, to me, I'll be shorting it if I see it there. Then I'll just put 100 pip stop on it. If it goes wrong, it goes wrong. If it goes right, I'm in the money. Right, dollar yen, monthly chart. Similar kind of scenario here. Now, like I said, monthly chart, major trend line here. Again, novices don't look at these charts. You should do. Professional traders are looking at these charts. The big boys with all the money will be watching these charts, and that's why you can be on a short-term time frame, say 1 hour, 15 minutes, whatever you're doing, and all of a sudden the market completely reverses on you. And I'll be honest with you, I've been trying to day trade the dollar yen, and I've been going long. Didn't even look at this chart until a moment ago, and I wonder why the market tanked today and yesterday. Now I'll just quickly flip to the 1 hour. Look at this drop. Let me show you. Look at this drop. And it was obvious when you look at the monthly chart why this has happened. There's a huge drop on the dollar yen, huge, and I didn't even notice it. So I'll be honest with you, I lost money. Short-term short-term trading, lost money, and I didn't lose a small amount of money, but that's by the by. That's what you get for trading these shorter-term time frames. I shouldn't have done it. If I'd looked at the monthly chart like I've done here, then it's pretty much showing you watch that level, very, very dangerous to go long, and I paid the price for that. That's fair enough, lesson learned. But let me show you another reason, or more reasons to back this area up, because it's such a strong resistance area. Look at this. So Fibonacci from this major swing point down, what do we see? Price, like the euro dollar, hits 61.8 and falls. Now if I draw another Fibo from the next major swing point up here, down, we've got confluence. So we've got another Fibo level there, overlapping the 61.8. But so I wait to that, we've also got another one from this major swing point up here, which is back in 1998, somewhere around there. I draw that down, and you can see that prices hit 38.2 retracement level there. So it's a massive resistance area, guys, massive. So me being a short-term trader, which I don't normally do, I was a fool to myself to go long there. It was absolutely ridiculous. It's a major resistance area, and I paid the price for that. Like I said, I don't want to keep going on about it, but there we go, guys. That's a major resistance area. So now, you know, I don't like to trade blindly. I wait for price action to confirm entries. So now this is still the monthly chart. If I zoom down, go down to closer time, not time frame, just so I can zoom in. Sorry. Notice these two monthly bars together. That's a massive reversal signal, guys. That's a pin bar. That's a 2-month pin bar. Massive reversal signal on the dollar yen. All we need to see is for price to come down here, and as far as I'm concerned, the dollar yen is going to tank. It gives me a lovely feeling inside to see trades like this. This is a beautiful setup. Price comes down below that level there. Let me draw it in for you. Down here somewhere. Obviously, we're talking massive number of points here, so we don't just take a trade if price breaks that level. But that's what we want to see. Price break that level. Doesn't even have to be quite as low as that. A little bit higher, and then we start examining the pair then for potential trades. So I will hopefully do another video on this, but the dollar yen to me is showing early signs of a huge drop. Okay, you heard it here first. Dollar yen looks to me like it's going to drop. It might not be thousands of points, it's unlikely, hundreds of points I would say so. So there it is, the monthly chart is showing a reversal signal, guys, on dollar yen. Let's keep an eye on it. As these days progress over the next few weeks, we can look at possibly, well, I can look at possibly taking a trade on dollar yen short. And there it is, it's showing all the signs that this wants to reverse. Just look at those two bars together. The month hasn't quite ended, by the way, so I'm doing this a little bit prematurely, but I'm just trying to point out the action before it happens, and then I'll give you an update later on in the next few weeks, probably, or days, who knows. But there we are. Okay, guys, hope you enjoyed the video. Speak to you soon. Bye bye.